Welcome to TradeTheNBI.com. This is John. This report is for the 7th of March. And well, NBI White, that's about all you have to say in this particular case when you have that DOC orange caught between cyan and red. Continuation, and made a brief little move above the 23, but immediately started to fade underneath it. And once that started, it was just a matter of revisiting the zero, made a new one and popped back up. We'll see a slight little improvement here, but you can see big drop in the NBI White, but of course, correspondingly magenta, just barely over. So you're going to get that back and forth still where, you have some pop within it, but the broader weakness is still built into this setup until we get some kind of DOC steel reset here. Short-term buyers just not available to, really step up and do anything. Some of this was, data as well as just the general turnaround of, normal activity, because at this particular stage, it's still in the transition period until there's a concrete directional move. And of course, you see with the courts blocking a lot of the activity, you're going to get this intermediate range. And again, we still don't know with some of these rulings how much deficit cutting there will be, whether there will be a new budget coming through. That's still up in the air, hasn't moved. From an NQ standpoint, you can see a bit worse here, but closer to a crossover potential for orange moving out of the range. If that happens, that would be the first catalyst towards not just a stabilization, but a chance of a turnaround. From a Treasury standpoint, there's still plenty of money moving into Treasury's sideline, parking, waiting, just to see if they could, they would move into oil or some other area. But as you can see, oil continuing to build in its draw, no fill of the strategic reserve. These are all things that are helping to ease the amount of oil. And of course, I think they're just waiting until they get to an attractive level before they start to do that. And when supply reaches a point, then they'll use purchases for the strategic reserve as a way to kind of stabilize price where they want it. But it's still way elevated here in the mid 60 range. We're at the bottom side of things where they were at the end of last year, but it's still too high for any meaningful. Now, of course, the euro has promised to spend, and they're not going to let go. So that's building a lot of excitement. But actually, a lot of this is a result of that oil drop, and it means that with winter ending, it's a saving grace for the euro, at least a temporary situation. But I think it's a bit euphoric. They think that the U.S. economy is going to be dragged down with the tariffs to the point where there's no growth. But I think we're seeing that from a broader context, the tariff situation is meant as a negotiation. But you see some paralysis on the sides. Obviously, Canada's fighting it. Mexico being a bit more cooperative. And I think that's just going to be the ebb and flow of it. Nobody's just going to want to. They don't want to change the status quo, so they're gonna fight tooth and nail. But the numbers are going to come out way negative for them. So I think that you'll end up seeing agreements at some point. Maybe not with China and that, but definitely some of the smaller partners are going to really be squeezed if they don't, particularly if it drags on through the later part of the year. From a gold standpoint, though, it makes it still the most attractive of all of them. There was a big hype in crypto for a little bit, but then we saw the executive order was just to reserve the crypto that the U.S. government already has, some 200,000 Bitcoin, and just make sure that it's accounted for and correctly stored and not sold as it has been in the past. So it was a lot of hype, and I think there were quite a bit of disappointment within that. And so I think that led to a little bit of softness from there. Still doing way better than ETH from a relative standpoint, but not that big a bonus. So what we saw from the early morning was that decline from the NBI White still leading. The magenta took over. We had the peak back up to the 50, but then there it was. NBI White popped up, slow decline. It wasn't until you got the crossover of magenta underneath yellow right about there, and that led to your move to the zero, and it stayed in the lead pretty much back and forth, a couple little pops, just right until recently. now we're right back with it. But we can see right here at this tail end, MBI white popping back up. If it dips below the 25, then you would expect to see another move back towards that zero. That's how powerful that is. It just signals it all along. This is what it looked like intraday. Everyone got excited at the open and bought it all, and then the put action came through and drove things down. And then later in the day, the calls back up there to take away some of that pain. But of course, you have options expiring, and that's going to have some added volatility. But the volatility has just been fantastic. It's just a matter of following the readings from that, and this is what we expected to see. I didn't know that it would happen this fast at the beginning of March, but whew, nice ride. All good stuff, though, and well within our expectations. So just continue to follow what the readings are, and everything's going to be great. As always, though, anything relevant, I'll put in the Skype chat for you. Have a good one. Trade well.